The Grow Your Wealth Conference is almost here. If you're a seasoned or aspiring entrepreneur ready to elevate your business and personal finances by learning from experienced, impactful, world-class entrepreneurs, then this conference is for you. Grow Your Wealth is happening over 2 days in Kingston, Jamaica, with unique speakers, business networking opportunities, actionable teachings, a business pitch competition, and access to an engaged community. So save the date and get your tickets now. Tickets and more information are available at learngrowinvestconference.com. Thank you so much for joining us and welcome to day 2 of the Start Your Business Challenge. Now, we are passionate about entrepreneurship over here, and so we would love to help you to get on the right track as you are seeking to start your own business. So whether you are a 9-to-5 with a side business and trying to get that formalized or normalized, or you have already started your business and there are just some kinks that you're trying, some things that you're trying to clarify, like, did I do this correctly? Do I need to correct it? No, this is the challenge for you. So 2 of the professionals who you're always recommended to have on your team as you're seeking to start a business are a lawyer and an accountant. And we have both of them with us this evening. We're gonna start off by sharing with you, not me, but Kevin McIntosh of Signature Creed and Associates. He's going to be sharing with us this evening what you need to be taking into consideration from the accounting perspective. What are those considerations? What is important to note as you're seeking to get on the right track with your accounting, which is very important. I cannot even begin to stress how important it is to have that on track early. We learned the hard way with our first business because we knew nothing. We knew nothing about accounting, knew nothing about taxes, and we tried to feel our way through the dark, and it ended up in us closing that business down, right? So this second time around, we learned the lesson and we got our accountant on board early. We want you to do the same thing. We want you to learn the basics, but also enlist accountants and professionals as early as possible. And then a little later on, Chanel May Brown will be joining us to talk about the legal considerations when starting a business in Jamaica. She has so much experience in the area, and I encourage you to stay on and hear from both these experts this evening. Now, we have the Learn, Grow, Invest team has curated once again the Grow Your Wealth Conference 2024 for you. We are focused on entrepreneurship, and this year, Kevin, who is here with us tonight, is going to be one of our speakers. So when you get the value today, just know that there is much more value to get on conference day as well. So we want you to get your tickets now over at learngrowinvestconference.com and join us on November 29th and 30th at the Jamaica Pegasus Hotel for Grow Your Wealth 2024. All right, so without further delay, I'm going to invite Kevin McIntosh of Signature Creed and Associates to the platform. Welcome, Kevin.
Thanks for having me, Renee.
It is an absolute pleasure, and I'm really looking forward to your presentation. As I mentioned, I would have learned a lot of the accounting side of business through trial and error. So I'm happy that you're here to give us the curated version, the version that we should do, and not the trial and error version, right? So without further delay, I'm going to hand over to you so our audience can get the full benefit of your time with us this evening.
All right, thank you very much. All right, good evening, everyone, and thank you very much for having me this evening. So this evening, what we're going to do is go through what I call the accounting starter pack. right? I know there are some times when everyone wants to start a business, and as we start, most of the time, the last thing on our mind is, I need to have my books in order. Or when we do want to have our books in order, it's either one or two things. One, we've got a call from TAG to say that we owe money. Two, we want to grow the business. And as such, we go to the bank and the bank says you need financials in order to move forward. Or three, you realize that you are making money, but you really don't know if you're making money. And when you start to check if you're making money, you don't have the records to show whether or not you're making money. So before we end up in those problems, we try to put together a small walkthrough to kind of to say, how should you go to set up your business as a new entrepreneur in this day and age? So we're going to go through a few topics. We're going to try and go through the basics. What are the types of accounting methods that company nowadays use? What are the key financial statements that we should be producing at the end of the day once we do have our accounting in order? The basics of bookkeeping, some tax compliance and reporting requirements. How do you budget and forecast for your business as SMEs? Some simple softwares that you can use, very inexpensive software. Sometimes we think about accounting, we think that it's overly expensive. It doesn't have to be, especially as a new entrepreneur, right? Some internal controls that we should be considering when setting up our business, also with fraud prevention. And also, finally, how do we manage our money effectively going forward? All right, so we're going to look at the first topic, which is what are the different types of accounting methods. Now, accounting essentially comes in two ways. We have what we call the cash accounting and also what we refer to as accrual accounting. The cash accounting is a very simple form of accounting that in most cases are used by simple businesses, and we realize that some government agencies do rely on cash accounting. And this is basically, you only record transactions when you make a payment or when you receive funds. So there's no consideration for if anyone owes you money, yes or no. You only record your income if you get paid for a service. You only record an expense if you pay that supplier. However, cash accounting is somewhat an informal form of accounting. It's not used widely, especially by private enterprises, because it does not report the full scope of what is happening within a company or in a business. That is why we have what we refer to as accrual accounting. Now, accrual accounting focuses on transactions that are owed or owing on either side of the transaction. If it is that you send an invoice to a supplier, to a customer rather, and that customer does not pay that invoice, it means that they still owe you that money, even though they have not paid that money. And that still means that you have actually earned revenue, even though you have not received the cash from that customer, right? So because of that, now you have to actually record that money as revenue, and on the balance sheet side, you have to record a receivable from that customer. And what that says, especially to TAJ, hello TAJ, if you're watching, that says to TAJ that yes, you are making money. However, they realize that you've not yet collected for that money, right? Now, accrual accounting rather is more internationally accepted. Every single um, let's say listed company in the world, most private entities will rely on the accrual concept of accounting, because that gives us the full scope of understanding in terms of how exactly is my business performing. Am I making any money? Do I owe anyone any money? Does anyone owe me any money? What does my balance sheet look like? Am I highly leveraged in terms of, do I owe more to a supplier than the customers owe to me? Do I need to be working and getting additional cash within the business to manage the cash flow because of those situations? So those are the difference between cash accounting and accrual accounting. Now, if it is that we implement a particular accounting method and we employ all the methods that we're supposed to, we come down to our financial statements. What does our financial statements look like? Now, when it is that we employ the full scope of the accounting model, we end up with three basic statements. or income statement, as we're seeing now, shows how much we earn in terms of revenue, what the cost is to produce that revenue, and also what the administrative expenses are that assist us to earn those revenue. So if you look at the screen, you'll realize that company B would have net sales of 4 million, which shows that they've been earning from their customers. However, it costs them 2.7 million to earn that 4 million. But then it's not just about what it costs to produce that service or goods, rather. It's also about what are the other overheads that will require them to run the company overall. Because what we should remember is that our direct costs or the costs attributable to provide a good or service is not the only cost that relates to the business. You do have other costs that has nothing to do with the service but has something to do with the business in general, right? So that is where your selling and operating expenses or general and admin expenses will come in, which in some cases may be advertising, in some other areas it may be rent, it may be your utilities, but those may not have anything to do directly with the good or service, right? And then, of course, you come down to your net income. The next important statement is your balance sheet. Now, your balance sheet always accounts for your business's position at a particular point in time. The saying goes that your income statement shows how you have been performing over a period of time, which in most cases is 12 months, while the balance sheet will show what the business position is at one particular point in time. So the balance sheet will always show what the company is performing on December 31, 2023. However, if you look on December 31, January 1, 2024, it may be a completely different company, right? While the income statement will always show how the business is performing from January 1, 2024 to December 31, 2024. Now, the next very important statement that we want to look at, which is my favorite statement overall, is our cash flow statement. Now, the cash flow statement shows one in our operating activities, whether I have a very spirited co-host here with me. So our cash flow statement is broken up in 3 different sections: our operating section, our investing section, and our financing section. Now, the operating section shows whether or not our company is actually generating any cash flow any at all. Because we know we'll be in the trenches, especially for CEOs and operating officers. They're in the trenches daily. Their focus is, how many sales do I have? How are we doing with expenses? Are we managing our expenses? But then the cash flow statement, especially the operating activities section, is what tells us, are we actually generating positive cash flow from the core operations of the business? When we sell our products and we pay our suppliers and we pay our expenses on a daily or monthly basis, at the end of the month, at the end of a quarter, at the end of the year, is the business actually generating any cash flow? So for most persons, especially for investors, when they're assessing a company, for like myself, I always go to the cash flow statement and I look at the line that says cash generated by operating activities. Once I see that that is positive, and if I check multiple periods, I realize that it has been positive on multiple periods, and it also increasing period over period. That will say to us that this business has a stable model and it's continuously generating cash flow from operations, which means that there's a potential for us to get dividends, or if it is that the company does take on any form of debt, they have the money to repay the debt. The other section of the cash flow statement is what is referred to as the investing activities section. That section focuses on how much capital is being spent on property, plant, and equipment, which is basically your furnitures. If it is that you have a machine intensive enterprise, how much money you spend on the machinery that is needed to run the business, etc., and any other investments done within the company. The final section, the financing activities, focuses on how do we raise money to run the company. So for some of us starting our companies, we'll say, I have $1 million in my bank account. I want to start a cake business. I'm going to invest that $1 million in the company to start that business. Financing activity is where you would see that 1 million investment be shown in the business. Simultaneously, if it is that your business has been doing well for a number of years and you decide that, listen, my business has been doing well, it's generating cash flow, I feel like it's time for me to pay myself some dividends. This is where you would see that dividends being paid out of the company to say that, okay, you've paid this out of the company. Or if you decide that, listen, I need additional money to scale this company now, we've been running in for 5 years, we feel like we've on a solid footing, let's take some leverage and scale. That loan will show up in financing activities to say that this is how we're getting money in the business to further grow the company. Now that we've understood what the accounting cycle brings us to, let's go back to the beginning. What do we need to do to come to the final statements? Now, the core basic of accounting is our bookkeeping. What is bookkeeping? Is basically the process by which we ensure that all transactions are recorded and reported correctly. Now, bookkeeping helps us to track our invoices from our suppliers, track our receipts from our customers, and track all expenses that take place within the business. So the process of bookkeeping ensures that every transaction that runs through the company on a daily basis is recorded and reported properly. Now, those transactions are recorded based on a list of accounts that are created. That list of accounts is referred to as a chart of accounts. Now, the chart of accounts is, while most accounting softwares will give you a template, it's very advisable and important that you reach out to a registered chartered accountant who can guide you in terms of how to create your chart of account. Your chart of account is what helps you to categorize each transaction that takes place during the day, so that when you finish recording your transaction, you can basically provide a full set of financial statements on the back end. Now, a big part of the bookkeeping process is how we reconcile our accounts within the chart of accounts. Now, on a monthly basis, each account needs to be reconciled. Most of this reconciliation process takes place during the bank recon. So that as each transaction is recorded within the bank accounts, at the end of the month, it is expected that those bank accounts will be reconciled based on the information and source documents within the company. Now, I know I've seen practices before where individuals will say my bank accounts are reconciled, but the bank accounts are reconciled, but the transactions may not be properly classified. One, because the chart of accounts were not set up properly. Two, the person who is classifying, most times if it's a new start SME, it's the owner that is doing the classification. And in some cases, they're not familiar with how to classify those transactions, or they have not set up their chart of accounts properly from the beginning, which is why I always recommend, when you're setting up your company or business, I know accountants, well, some can be expensive, but the investment in the initial phase is always important to ensure that the company and the reporting of the company's transactions are done correctly from the beginning, because that will help you to avoid issues down the road. I made a statement earlier today that there is a concept called delayed gratification. However, on the flip, there is a concept called delayed consequence. you can do something wrong now and think it's okay, but a couple months down the road, when you do need what you do need the output of what should have been done correctly, that is when you will end up calling the accountant and said, 12 months have gone by, I've gone through 12 months worth of transactions, the account is wrong, I need you to come in and reconcile and repost everything. So let's try and avoid that issue. So at all times from the beginning, have a chartered accountant or someone that is qualified assist you to set up your chart of accounts. Now, once your transactions are done and reported correctly, at the end of certain periods, which is end of the month for GCT, end of the 15th of the following month for statutory reductions, March 15 of each year, you need to start reporting your tax compliance to TAJ. So once it is that your transactions are classified correctly and reported correctly in your chart of accounts, and you're able to produce your income statement, your balance sheet, your cash flow statement, you have now put yourself in a position to readily and availably prepare your tax compliance reports to the TAJ. In Jamaica, the normal taxes are the GCT, which is general consumption tax. Now, GCT is only payable on entities that are producing 10 million or more per annum. Once you hit that threshold, you are required to register for GCT. Please do not sit down and say, "Oh, I don't need to register because TAJ will never know." They will know. And when they do know, they will come and they will assess you for transactions gone once you've gone over that threshold. The other tax is your income or corporate income tax, which is filed at the end of the year, March 15, and that is based on your profit that took place during the prior year. One of the other ones are your statutory deductions, which are taxes that are deducted from your employee's payslip, which is due to be filed at the 15th of the following month. Now, once it is that your accounting is up to date and it is operating effectively, you should not have an issue with producing these tax reports. However, as usual, please consult or engage a professional accountant. If it is that you do not understand, don't presume that you know, because there are a lot of innuendos within the tax laws which at most times persons make simple mistakes and file their tax returns incorrectly, which when TAJ does do an audit, they end up that they have additional liabilities that they need to pay over. So please, if it is that you need assistance or you need guidance where necessary, seek a professional accountant or advisor. Now, as you're going through your accounting process, you'll realize that the numbers become more and more important. And as if it is that you set up your accounting systems properly, you realize that you are readily available to get the data to assist in creating budgets and forecasts going forward. When you're just starting out your company, it's easy to make budgets based on assumptions. However, what we should always remember is that when we're making a budget, the budgets are driven based on whatever assumptions that we make, especially if the business is new. And for most of the budgets that I see, the budgets will start at a $500,000 in revenue for month one and then start shooting up by 20 or 30% per month. If there's anyone in business, we know that that's not how business works. A budget does not earn a million or 500,000 revenue in one month and then start doubling thereafter. It may double in the following month, but there's a high possibility or probability that it will dip the month thereafter, right? So when we do have enough data, then we can properly budget and make assessments for the swings within our particular market and know how to go about assessing the needs of our business going forward, right? And in most cases, we are able to monitor those budgets based on previous occurrences of the business in history and also based on what the actual performance is month over month. Now, for businesses that are starting out, there are some very inexpensive softwares that can be recommended. Accounting or setting up your accounting is not very expensive from a software perspective. Softwares right now cost as low as $15 per month up to a high of $70 or $80 per month, depending on the size of your business. There's QuickBooks, Zero, FreshBooks are some very popular tools nowadays that you can look at. However, what I will put out there is that there are other new softwares, accounting softwares coming out, same price points that includes a lot of AI technology in terms of how your accounting is reported and recorded, what can be automated so that you can relieve the stress of yourself to ensure that the books are being done properly without much input from yourself. So you can have do some research, see what those accounting softwares are that are AI enabled to assist you to improve your business. Now, this section is one of my most one of my favorite topics, which is internal controls and fraud. Whenever you're setting up your company, especially in your early stages, it's important to go forward with the mind that I am setting up my company for success. A company that is set up for success is one that has the relevant controls to manage how money enters and leaves their company, right? Who has authorization to process transactions? Who has authorizations to approve transactions? How do I audit the transactions that took place during the period? Who are the reporting lines within the company to ensure that nothing goes without your say so, or nothing, or the chance of theft or misappropriation of assets is as limited or low as possible. Right? There are a number of technology or tracking tools that can be implemented. Some of the same accounting softwares we mentioned before do have workflows implemented within them that can assist you. However, I realize that entrepreneurs don't really ask about them, so they're not implemented within the business. But even from an individual perspective, it's easy to implement a lot of simple controls. One of the main ones realizes that when you have bank accounts, it's easy to want to give someone the authority to process a transaction on their own, mainly because it allows you the breath to do whatever you want, right? But at the end of the day, when you give someone that leverage over your company, you're giving them the leverage to take the money whenever they want to. We can always depend on the integrity of an individual, but the integrity in your internal controls is much more important. Have the level of segregation of duties, authorization of transactions, regular audits are safe and sound in the long run because that's what protects you. We've seen a number of news articles where there's a lot of fraud within even major companies nowadays, mainly because there are breakdown in internal controls or fraud prevention mechanisms that occur at a large company stage, which means that at a small company stage, it should be easier for you to manage and maintain to ensure that you don't lose your company on the back end. Now, a major part of setting up your accounts properly is to be able to manage cash flow effectively within the company. Now, if you remember when we brought up the cash flow statement, we were able to see the different flows of cash through the business from operating activity, investing activity, and financing activity. The only reason we're able to prepare a statement such as that is because we have the proper accounting mechanisms in place to do that. Now, when we do have those mechanisms, we can monitor our working capital from an easy perspective. What is working capital? Working capital is the money that we need on a daily basis to run our company. So this is based on the money that we have from accounts receivable, the money that we have from the cash in bank on the balance sheet. If we do have inventory, how fast are we moving those inventories in and out of the company? If we do have payables, how fast are we paying our suppliers to ensure that we manage the cash accordingly? Now, there's a little metric that is based on our receivables, cash, inventory, and payables that we call the cash conversion cycle. Now, the cash conversion cycle is basically how long it takes for us to generate cash within the business, which is a function of how quickly can we collect on our receivables, how quickly can we sell our inventory, how slowly can we pay our suppliers. That's a thing. And basically that determines how quickly we generate cash in the business. The lower our cash conversion cycle, the better it is for us in terms of running our company and managing our working capital. The longer cash conversion cycle is, in most cases, those are the companies that readily jump to want to either raise additional capital for working capital or raise additional debt to manage their daily operations. Right? So that is why it's important to one, understand what do you need to have on hand to run your company on a monthly basis. That number is very important. If it is that you were to tell the bank or an investor that, listen, I need X amount of money to go through the month, what is it you need to cover? Payroll, rent, utilities, inventory needs, supplier needs within your manufacturing or production process, or whatever you need to cover, consultants that you may be needing in your firm. What is that monthly amount that you need? The recommendation is that you need to have at least 6 months in terms of cash reserve to manage the company. That's 6 months separate from your working capital, right? Because if it is that your cash conversion cycle becomes so long that the generation of cash flow has reduced, you need to be able to go to your cash reserves to ensure that for 6 months you're okay. However, that 6 months is very different when it comes to other industries. So that while the 6 months is somewhat general, different companies within different industries may require a longer cash reserve pool. So depending on how your specific, which industry your company is in, you may require a longer or shorter period in terms of cash reserves. So it's important to know what that amount is. How much do I need in my company on a monthly basis to cover all expenses? And that is holding the assumption that I'm not making any revenue right now, or if I'm making revenues, I'm not able to collect on my receivables. No, and that unfortunately ends our session tonight on accounting principles. So if it is that you have any takeaway, any questions for me, you can always reach out to me, whether on LinkedIn, Instagram, or Twitter at Young CFO or Kevin McIntosh, and I'll be sure to assist you. Renee?
All right. Thank you for that, Kevin. Um, so before you go, right, we have a few. I don't see any questions in the chat just yet, but I have a few things that I wanted you to reiterate for our audience, right? A couple of things that really stood out. And as I mentioned in the introduction, we would have learned the hard way with our first business, right? So you mentioned delayed consequences. And I think that's really what we experienced. We didn't do the thing the right way the first time. We didn't do it well early out. And so we had the delayed consequence of then trying to figure it out after the fact, especially the taxation part, which really got us in a jam. So then we had to be trying to figure it out and work it out with tax office. And that was difficult because now the costs would have been much higher than if we were managing it properly from the start. So I wanted you to just expound on that part a little bit more, as to the initial setup. What should persons be looking to do as they're seeking to start their business? What areas should they really be focused on getting right at the beginning?
So as simple as it seems, right? In the initial phases, the importance is always on setting up the chart of accounts properly, right? Once the chart of accounts is set up properly and you have a simplified accounting process set up in terms of what your transactions are and how do I record these transactions. Because for some businesses, especially if you're not accounting or finance based, all you're really all you really care about is that I sent an invoice, my invoice was paid. A
Mm-hmm.
supplier sent me an invoice, I paid the supplier or I owe the supplier or whatever the situation is. However, not all transactions are the same and not all transactions are recorded equal, right? It is really up to whoever that accounting professional is to understand what your business is, what industry you're in, what are the normal ways in terms of how your transactions are reported. Because even though some, for example, even if you send an invoice to a customer, you may not have even produced that service as yet. However, it may be your practice to send the invoice ahead of time and say, okay, pay me 50% or pay me a certain amount and we'll carry out the engagement and then afterwards you pay me the difference. Or I do know some persons that they will send the invoice ahead of time before anything is done. They'll ask for 100% upfront before anything is done, and then nothing is still done, and when the month ends, they'll come and say, I made $100,000 in revenue, but yet you have not done anything for the client.
Mm-hmm.
If you're going to dig into the IFRS standard, IFRS 15 did a very comprehensive breakdown in terms of identifying what exactly is revenue versus what is not revenue. Because if it is that you've not provide or produced the the obligation under the contract to that customer, and there are multiple performance obligations, and none of those performance obligations have been fulfilled, you've not earned any money. So basically, all you've done is collected the client money, which now becomes a liability to you because you've not really earned that money, right? So the accountant who would know the standard will know, listen, that is not revenue, and that is a liability on your balance sheet. That is not revenue on your income statement. So let's report it accordingly. Once you've completed those performance obligations, you've met the
Mm-hmm.
relevant timelines in the contract, the considerations have been fulfilled on both sides, both the customer and yourself, you're free to go ahead and report that as revenue. Right? Once you've gone through all of those and understand that and made those transactions, reported those transactions correctly in your accounting process, then you should be okay going forward, knowing that all right, we did this, we haven't completed whatever, we know that that's a liability and not revenue, right? Those are some simple stuff, but I've seen where persons run on the, let's put it this way, there are a lot of entrepreneurs who have a hustler mentality, which
Mm-hmm.
is not a bad thing, but for them, you move very fast. So you just collect your money, do your thing. You say, oh, I made this, I made that, but really you haven't. And then when it comes to end of year now, and you've not engaged an accountant any at all during the period, you think that you're doing okay. You haven't filed any form of taxes during the year, whether GCT or statutory deductions or end of year taxes, and you get a letter from TAJ for a demand notice that, well, not a demand notice, a final notice that you need to appear in front of the magistrate on X date because you owe X amount. That is the delayed consequence now, where you reach out to an accountant to say, listen, I need you to go through 12 months worth of transactions from 6 different bank accounts, from 80 different customers or 100 different customers to reconcile my books and come to an amount that I owe TAJ or whoever it is. So we're always trying to up, because that is a very expensive process,
Mm-hmm.
right?
Yeah.
And it's cheaper to spend a small amount upfront to get the books proper than to come on the back end to pay a firm millions of dollars to correct your book and get you out of a bind.
Right. So thank you for that. Mystic Soul had a question based on what you were saying. So she's asking if that money will not be taxed if it doesn't fall within the tax calendar year. And I believe that question was referencing the example you gave about about the invoice being sent and paid. So you've received the client's money, but you have not yet executed and provided the
So,
deliverables.
so the fact is you can't tax money you haven't earned, right? So the tax is focused on income reported on an income statement. Once it is that you have a liability, you can't really tax that liability. The only thing that may come out of that, and it's depending on the model you're using for GCT, would be the GCT that you collect from the customer. So you have to pay that over. But when it comes to whether or not it's revenue or not, if you haven't earned it and you report it as a liability, then it can't be taxed thereafter. You have to report it once you have reported it as a revenue.
Got you. Mistake, you
And
can let us
just
know.
another point though, for even for that case, if TAJ assesses it, they'll assess it based on what the situation is.
Understood. All right. And the last thing I'll ask you before I release you, I wanted you to just talk a little bit about the $50 million threshold. So we spoke about TAJ, right? And when that GCT
Or 10
kicks
million.
in, 10 million.
The 10 million threshold.
Right. When that kicks in. So I know from just having conversations with other persons who are considering getting into business or considering formalizing their business, they're very concerned about GCT and taxes in general, right? And how much that will impact their business or impact what they're able to take home. So I wanted to take the opportunity to ask you to talk to us, talk to our audience about that in
So
terms of GCT and just taxation generally.
what I'd say is I'm not the tax expert within the firm, so I won't purport to know everything about it. My partner is very skilled within taxes, and that is his specialization. However, the fact is tax is something that helps to grow the country, right? And we just have to assist in that space. However, in terms of managing taxes on your business, you have to one assess what is my service worth, right? If I'm charging a particular amount for my service, will this help me to run the company effectively? Because at the end of the day, if you're going to charge $100,000 for a particular service or product, you know automatically that you have to add 15% on that for GCT. And that money is not yours, that money belongs to the government. What I find some entrepreneurs do is that when they send an invoice to a customer, they'll send $100,000, they'll book it $100,000 for the service. You have to tack on the GCT, which means that $115,000 will come in the business as cash. They end up planning on the $115,000 to pay Tom, Dick, and Harry. However, that $15,000 is not you. The split should be Tom, Dick, Harry, TAJ, and TAJ should come at the top. The practice that I see some companies do, which is smart, once that money comes in, you send the $15,000 to a separate bank account to know that at the end of the following month, you pay that money over because it's so persons need to stop planning on the full amount of the invoice and only plan on what belongs to them.
But
Right?
Kevin, I think one of the things that would have been shared with us as a concern is that once you hit the threshold and you start to charge taxes, then persons feel as if their clients are now going to say, oh, but no, you're too expensive. And they feel as if they're going to lose clients because now you're quote unquote too expensive. What do you say to them about that one?
Here's the thing. I mean, saying you're too expensive is one way of looking at it. However, are you providing value to your clients that is worth the money you're charging? If it is that you sit down with your clients and you ask the question, we've been engaged for X amount of period, I've charged you X amount of money, which I thank you for. However, are you really benefiting from the service that I'm providing? If their response is yes, or even if you're within services like marketing, advertising, and where you're expected that KPIs will add towards growing revenue, if your service is proving that you're assisting them to improve their revenues, I don't think there's an issue in terms of what I'm charging. It's
Gotcha.
really about whatever you're charging, are you adding value to your clients or customers? If it's a
Agree.
restaurant and the customers are enjoying the food and they continue to come, maybe you should add an additional 5%, man.
Service charge. All right. So I think this is Lanestro says that's the fear for me. I really want to register my business, but I think that should be I'm not sure I'm making enough to pay tax and pay an accountant at this time.
All right, so tax. If it is that you are thinking of going into business, you have to understand that businesses comes with responsibilities. Yes, businesses come with a lot of advantages, especially in terms of being able to earn more money than you were earning if you were working a 9 to 5. But what we have to remember, and this is just being frank, running a business is not easy. It's hard, it's difficult. Some persons cry, right? Because there it's not just about, let's go back to the income statement that I showed, right? At the top of the income statement, a lot of entrepreneurs like to focus on the top of the income statement, the revenue line. If 100 million, 200 million, 50 million, I'm earning a lot of money. What about your cost of goods? What about sales and marketing? What about administration? What about if you have a loan? What about your interest expense? What about the taxes? There are consequences for wanting to grow. And if you want to grow and grow steadily, you just have to deal with those consequences. And with running a business, a part of those consequences is paying competent and professional advisors to assist you throughout the business, whether it is your accountant, your lawyer, if it is that you have outsourced persons, your outsourced marketer, or business advisors, you need them beside you to assist you to avoid the pitfalls that will eventually come.
I fully
Delaying the
agree.
consequence is a real thing.
It really is. It really is. So thank you for that. Thank you so much, Kevin. I see Jermaine said it was a full masterclass. So so I know you have, I know there's so much more that you have to share with us, and I'm really looking forward to your presentation at the conference at Grow Your Wealth 2024. Again, just reminding everyone, November 29th to 30th at the Jamaica Pegasus, we will be having our conference for entrepreneurs, targeted towards helping us accelerate our growth and truly grow our wealth as business owners. So we want to do it well, we want to do it the right way, and that is why we are starting with the basics here with the Start Your Business Challenge. And Kevin will be presenting at the conference as well for a longer period, and you'll also get a Q&A with him there. So get your tickets over at learngrowinvestconference.com. All right. Thank you again, Kevin.
All right, thanks for having me.
All right, no problem. So while we were talking with Kevin, our next guest, Chanel May Brown, hopped backstage. So she is here and ready to go. Now we're going to be talking about the legal side, right? At the start, I said we're always encouraged when starting a business to have a lawyer and an accountant. So we heard from our accountant, we heard from Kevin. Now we will be talking to Chanel, the lawyer who has all the expertise on the corporate side, on the business side, to tell us what it is that we need to be looking out for, what it is that we need to consider from the legal aspect when starting a business in Jamaica. So please help me welcome Chanel May Brown. Welcome, Chanel.
Just do a mic check. Can you hear me?
Yeah. Yes, hearing you well.
Okay, fantastic. Thanks for having me. Thanks, everyone. Good night. And I was listening backstage to what Kevin was presenting on, very useful even now while I'm practicing law. And what I'll just jump on is when he says that it's better to always try and get the advice earlier than later, because it's always cheaper to get at the beginning than try to hire somebody to fix a problem.
Yeah.
So I'll go ahead and share my screen and get right into the presentation. Feel free to ask questions while I present. I think you manage that, Renee.
Yep. We'll talk about it. I'll jump back on a little later when you're through to have a chat about what you share. So over to you, Shaniel.
All right. Thank you. All right. So gonna go straight into I control the change, Renee. Renee.
Oh, sorry. Yes, you can. Yes, you can.
It doesn't seem to be
Are you having a challenge? All right, let's go. I'll
All
do it.
right. So you're going right into it. Registration. I don't know why on my screen it seems to be frozen. You moved?
You're on the registration with the company's office slide.
Okay, yes, it just changed on my screen. Sorry. Right. So registration with the company's office. And I started here because when you're going to start a business, there are a couple questions you have to ask yourself. And that the first question is, how do you want to operate this business? You can either operate the business as a sole proprietor, you can operate the business as a partnership, you can operate it as a limited liability company, or if for some reason you have anyone here who's overseas who already has a foreign company, you can come to Jamaica and operate as a branch of that foreign company. A sole proprietor, I believe, is what most small business owners start off as. And what that means is that you don't really create a company. You have this business name that you use to brand the products or service that you offer, and you offer it through you personally. So, for example, if I was selling, let's just say, shoes, and I didn't want to create a company, but I had my business name that I use when I'm selling or advertising the shoes is Shoes R Us, I could go and register that business name at the company's office as Shoes R Us. That does not give Shoes R Us the box of like a company. It just means that Shaniel May is trading as Shoes R Us. And you have a lot of businesses, sole proprietor or companies that use business names. A very popular one is KFC. KFC is not a company name. KFC is a business name, and that is used to trade. You also have some sole proprietors that they don't feel the need to incorporate a company because again there are a lot of obligations that come with incorporating a company. But if you have a business name that you're using to trade here in Jamaica, you are required to register with the Company's Office of Jamaica. A benefit of that is that you're protecting your business name. So again, if for some reason somebody comes in and they want to create a company or another business and they try to go to the company's office to use a name that is similar to the one that you already use, the company's office would reject them from having the ability to register that. And again, it's a part of protecting your brand, which we'll talk to a little later. A partnership is another vehicle, and this is, as the name says, a partnership. You and someone else or multiple people want to operate a business. Again, you guys have decided that you don't want to incorporate a company, but you rather come together and have a partnership agreement where you decide to use a business name and operate the business under that business name. A lot of law firms and accounting firms actually use that approach in offering their business by using a partnership. Limited liability companies, this is the one that is known by a lot of people. These are companies, this is just incorporating a company where you offer your service or your good through that company. The benefit of incorporating a company is that that company is what we call an entity that has a separate legal personality. So for any contracts, for any tax implications, for anything under the sun, if something goes wrong, the company is the one that is named on that document, not Shaniel May in her personal capacity. So it's recommended to always use a company so that way you can separate, especially for small business owners or just generally, that way you can separate your assets from the assets of the company. To give you an example, if Shaniel decided to create a company to offer, again, shoes, but she had a personal bank account with money in there, but in a company account with money in there, if for any reason there was a suit against her for debt owed, they would come after the company's bank account. There would not be a direct access to Chanel's personal account because the debt would be the debt of the company. So that is a consideration of having a company being used as for your business. With a company, which we'll get to a little later, there are a lot of obligations that come in play with a company. You have to now think about filing documents at the company's office. You have to think about your tax returns. You have to think about ensuring you keep up with the corporate governance, your policies, your procedures, and things like that. Not saying that the other vehicles don't have that, but with a company, it may come off as more burdensome than if you just do it on your own. And the last one, which may not apply to all, but some people for consideration, is to operate via a branch of a foreign company. So you incorporated a company in Florida, Delaware, Wyoming, New York, wherever, and you want to come to Jamaica to offer a particular service. You can incorporate a company which would be a subsidiary of your foreign company. But if you don't want to do that, you could just register a branch of that foreign company. The main difference between whether you decide to do a branch registration versus a new company incorporation is that with a new company incorporation, which I call a subsidiary, that new company now has, again, its separate legal personality. So you separate, again, the assets and the liabilities of the Jamaican company from the foreign company. With a branch, there's no separation. So it's one of the same. If something goes wrong in Jamaica, they can come after your assets to the company in whatever foreign jurisdiction you used to incorporate that company. What vehicle you use really depends on what your current goal is and what your long-term goal is. You can start off with one and convert into another. Nothing prohibits that. It's just, again, at the time and space you are starting your business, you have to decide. What I want to point out is that you can't really, or you shouldn't really, run away from being registered with the company's office. Because I've seen where a lot of other third parties don't really want to do business with someone who is not registered with a business name or not incorporated at a company, and they can't provide things like certificate of good standing or a tax compliance certificate. So if it is that you really want to grow your business, these are things that you should really consider. So the next thing is about other registrations, which I touched on a few of them. Other registrations that occur when you start your business, despite whatever vehicle you use, you have the tax registration number, which is something that is very important to do business here in Jamaica. There is general consumption tax registration. There is registration, 1 and 3 kind of go together, really. Corporate tax is what you pay when you operate a business here, and that is tied to your T.R.N. And then you also have payroll taxes and deductions once you bring employees on board in your business, in whatever vehicle, again, that you use. When you register a business name, the T.R.N. for the business name is tied to your personal T.R.N. So generally what happens is that if you have multiple businesses that are sole proprietorship, so you're using different business names, they will all have a T.R.N. where the first 9 digits are your personal T.R.N. And then is your personal T.R.N. and then the last digits will say 1, 2, 3, and it goes on as depending on how many business names you have. With a company, remember I said that a company is a separate entity. A company gets its own T.R.N. It's fresh. It's not tied to your personal T.R.N. in any shape or form. Once, of course, you're registered for tax purposes, that is the number that you, again, use when you're filing your income tax returns with the TAJ and any other tax obligations that you have. That, again, is also tied to your payroll taxes and deductions when you report all those great monthly salary deductions that you take from your employees, NIS, education tax, higher contributions. It's, again, very important, and I think everyone would have touched on this, is to be able to manage your account, no matter if you have 1 employee being yourself or 10 employees or 50, because you do not want to owe the regulator. You need to, as you plan for your business, you plan for the income that you can use and the income that you have to set aside to pay certain taxes. Again, similar to GCT, where you collect that from the consumer and you're obligated to pay it over to the TAJ. When you deduct certain taxes from the salary of your employee, you're not to spend it. You have to also pay it over to the TAJ. So before we move on, I think there are a couple of questions. I don't want to go too far. So I think the first question said, so would you register it as a sole proprietorship or as an LLC? So again, it just depends on what it is that you want for your business. If you're really just starting out and you're working out of your house and it's something very, very small and you're trying to figure out if you actually want to do this business, you could start out as a sole proprietorship and register a business name. If it is that you have a big plan for your company, even though it is small, if you have a big plan for your business, even though it is small, you can still, you could also incorporate a company. It really comes down again to what your business plan is and what you intend to do. There is no hard or fast about partnership or LLC or company. It comes down to just weighing the pros and cons at the relevant time. Okay, so the next slide now is permits and license. When you're starting a business, no matter what you do, you should always check whether or not the offering of this product or service in Jamaica requires a license, a registration, a permit, an approval, whatever it is. The common thing, most people think that you have to be doing some massive big corporation type business to require any of this. But no, it really just depends on the sector you're in. So for example, if you're in the tourism sector, food and beverage, and of course, financial services, those are entities that if you're doing a particular type of business, you need to be licensed and registered. So, if you're doing banking business, the Banking Services Act. If you're doing microcredit loans, we have the Microcredit Act. If you're doing investment advice, you need to be a licensed investment advisor. So those are questions that you need to assess and figure out how that falls in your business plan, as well as how that falls in what route you take, again, whether as sole proprietor, company, or partnership. Because the licensing or registration requirements may influence what vehicle you have to use. If you're in an industry that you have to import or export a good, then again, you have to consider all the licenses that you will need. So that is something, again, that you need to build into all the other costs that you have to operate the business and the registration cost. So I see a question before I move on. So can't you just register it as a sole proprietorship, then move on to a LLC at a later date? The short answer is yes, but there are also technical steps to do it. So when you register as a business name, which is a sole proprietorship, you do have to renew that certificate registration of the business name every 3 years, because it does expire. If it is that you are changing now from your sole proprietorship to a company, you have to close down the business name and then incorporate the company. If it is that you wanted to use the business name with the company, the company, once incorporated, will then have to register the business name. And that has happened quite a lot. There's nothing that prohibits it. So it just depends on what are the type of costs that you want to incur. If you know that you're trying to register the business name now, but in a year for sure you're going to incorporate the company, you may want to just save yourself some money and incorporate the company now. If you're not sure and you need to give yourself like 3 to 5 years to figure out what this business model looks like, if you want to really take the jump into a company and make it bigger, then yes, I would say maybe go ahead under the business name. Again, there's no hard and fast answer. That one is not really a legal consideration. It's more of a commercial consideration. All right. So we dealt with the permits and the license and the other registration requirements. I'm going to jump to intellectual property protection. This is very, 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 very important. Sorry, go ahead, Renee.
I'm so sorry, Shadil. Before you go to the intellectual property, we do have a question from Instagram about partnerships. And they were asking, what is the best way, or what are the best ways to protect yourself in a partnership?
Have it in writing. You need a partnership agreement. So as it is now, Jamaica does not yet have an operative partnership legislation. There is one in draft that, it's being reviewed and going through, and it's can't really tell you when it's going to become law, if it's now or 5 years from now. So failing that, you do have to document your partnership agreement, and generally in agreements like that, you set out everything you need to set out in about operating the business, who the partners are, what the contributions are from the partners, how liability is dealt with if something comes up, what happens when a partner leaves, or how do you include new partners. You document as much as you can in relation to the partnership. So if something goes wrong, that is when you would deal, the partner that feels like something went wrong would bring a breach of contract kind of claim. The partnership agreement would also set out how assets are dealt with, as in how the assets are to be held. Because again, you don't have a company, so you don't have a separate legal entity. So if it is that the partnership is going to operate on that business name, then the business name registration would say, for example, if Renee and I are partners, we would say that the LGI is a business name and the proprietors on that form are Renee and Chanel. It wouldn't, if it is you want to agree for one person to be the owner, again, that is something you set out in the partnership agreement. You also set out what happens to the assets if you guys decide to terminate the partnership and to go your separate ways. That's all documented in the partnership agreement.
Got you. Thank you. And we have another one from Lanestro. Do you need to have a beneficiary for sole proprietorship?
I'm not sure if I understand the question, but if you're trying to ask if I need a shareholder for a sole proprietor, no. A sole proprietor is really the owner of the business name. When you have a company, then you can have one or more shareholders. Sole proprietorship doesn't include beneficiaries or shares, because again, you are just operating as you, the person, and there's no new person, no new entity created. So any assets that you have, if you want to deal with who gets it, that's a different argument now when you deal with your will. All of that will be tied up in your estate planning, which is a whole nother presentation.
Yes, which will also be at the conference. But all right, I will hand back over to you for the IP.
No problem. So, as I was saying, and I'll stress this again, intellectual property protection is very, very, very important no matter what stage of the business you are at. Your brand is a very important asset, and I'm actually seeing now more often that in financials, there's a value being placed to your trademarks, your goodwill, all of those great things. So if it is that you realize that you have this brand that you want to, take forward, whether it is as a good or a service, you should protect that as soon as possible. The most common form of intellectual property protection, that will be trademarks. So that is your logo, your name, your logo and a name put together because a designer created something for you. You need to go and register it at the Jamaica Intellectual Property Office. There's a process to get that done. You have to fill out a form. You have to give a representation of what the trademark looks like. You have to give the details of who the proprietor of that trademark is. And that comes back now to what your vehicle is. If it is a sole proprietor, then that would be the person named. If it's a company, you put the company information, that would be there. The most complex part of the registration is indicating the list, the goods and services that need to be protected by the mark, meaning what do you use the mark in relation to? Once you identify that, you in your registration form will indicate certain what we call classes. It's a classification system that runs from 1 to 42, if I'm ever certain right. That will tell you what you need to, what is the mark being used in relation to. So if you use the mark for providing financial services and you also use to advertise, things like that, you would specifically list the classes that apply to. So your mark would be registered in classes 3, 5, and 10. If for any reason someone else tries to use a mark that is similar to yours or registers a mark that is similar to yours, then you would have a footing to bring a claim for an infringement of your trademark. Even without it being registered, you may have the option to bring a claim of what I call passing off, which is a right in common law. But again, you always want to start up on a stronger foot, which is having the registration of the trademark, because that is notice to everyone. Other intellectual property protection includes patents and copyrights, which may or may not apply to the type of business that you're doing. But you should always ask yourself, what intellectual property do I have that I need to protect? For trade secrets, you can't register trade secrets, but you should ensure that any contracts that you have with your employees, your directors, that they include confidentiality agreements as it relates to your trade secrets and all the proprietary information. Because again, this is the core of your business and you want to protect it as much as possible. So the next thing that you want to consider are employment laws. And this you need to consider whether or not you are the sole person working for the company or you have 50 people working for the company. Once it is that you are an employee of the company, that is, the company pays you. And so let me just backtrack actually. This applies when you use the company as the vehicle for your business. If you are a sole proprietor, you don't really have to concern yourself with the employment laws. But if you are a company or a partnership or a branch, employment laws, you do have to concern yourself with, because you're now operating a business with other people that you need to know what their rights are under the legislation. So the first thing is employment contracts. All employees that have employment contracts, definitely recommend that they're being writing in case a dispute arises, but they need to also comply with the legislation. So they need to comply with the minimum wage requirements, hours, benefits, termination terms. If you have any pensions or other benefits, that needs to be set out clearly in the employment contracts. And you don't have to think, oh my gosh, I can't afford somebody to provide employment contract because it's going to be 50 pages. No, you have different levels of employment contracts for different businesses as well as for different people in the business. So your directors and your senior managers may have a more complex employment contract than your other employees. Another thing to ensure that you're au fait with, which I think I would have touched on earlier, is employment benefits. You need to know how to deal with the contributions to the national insurance scheme, pension funds, and the other mandatory statutory benefits. That's not something you can overlook, especially the NHT. So, timeline. I know you might probably asking yourself, do I need to do all of this all at once? If I do it all at once, how long will it take? If I don't do it all at once, how will it affect my business? The answer to that is it depends. Though you don't need to do all of it all at once. You can start off and progress over the time of you making your business bigger. So yes, as we would have said earlier, you create a sole proprietorship if you're not sure if you want to commit to a company, then you change to the company, and then you need to just ensure that you don't ignore all the other registrations, you don't ignore the permit and license requirement, you don't ignore the employment laws, but you set a plan to ensure you deal with them, whether on a small or a large scale. As it relates to the registration with the company's office, which is the most important one, because that is how you start, whether it's a sole proprietor, a partnership, a branch, or a company. Generally, I've seen once you submit the documents, provided there are no rejections, you can have your business name registered or your company incorporated in about 5 business days. The company's office sometimes, depending on their work pressure, they do offer expedited services where you can have that immediate registration the day off or the day after, but it really just depends. The process to get registered at the company's office is not long. What may be longer is the process to fill out or complete the form, because again, you need to know what it is that you want. You have to know who should own this business name. Do I want to own it, or do the 2 partners want to own it? Or do I not want to do a business name, but I want to do a company? And if I'm doing a company, do I want myself to be the owner shareholder, or do I want myself, my business partner, and my children to be the shareholder? How many shares do I want to issue? Do I want the directors to be 1 director, 5 directors, things like that? So it's starting a business shouldn't just be focused on the business plan to make money. Starting a business needs to take into consideration the corporate side of actually having the business create a structure and answering all the questions that we just discussed. Again, once you have everything on board with that, the timeline runs more or less, in a month, I would say you could have most things up and running. So ongoing compliance, I would have touched on earlier again, is something that no matter what route you take, you have to ensure you stay on top of all your obligations. You have your annual income tax return obligations and other tax filings, and this is regardless of whether you are a sole proprietor or a company or a branch. That obligation comes because, as residents in Jamaica, we get taxed. And as Kevin says, we have to do our part in making the nation better. With the company's office, again, if you are a company, you're going to have what we call annual return filings, which is separate from your annual income tax return filings. You would also have to update the company's office on any changes to shareholder, directors, registered office, and if you do a business name, if there's any change to the proprietor of the business name. And if for any reason you are an entity or a business that is regulated and you need a license or a permit, a condition of that license or permit may have regular reporting requirements. So, for example, those entities licensed in the banking sector, the financial services sector, they do have regulatory reporting requirements like yearly and quarterly financial reporting, change of directors, change of shareholders, things like that. So you also want to ensure that you have assessed your mind as to whether or not you have that regulatory reporting requirement in the sector that you are operating. So the next question is how many directors you should have when starting the company. So in Jamaica, you can incorporate a company with one shareholder, one director, and a secretary. So you're allowed to have a minimum of one. The only thing is that if you have one director, the secretary can't be the same person as the director. You must have a different person. If you have two directors, then one of the directors can be the company secretary. How many people really, again, comes down to the business and the model that you're looking at. If you're starting off small and you're just trying to get things started but make it, under a company, having one director is fine. If it is that you are trying to grow your business to the point where you want other shareholders on board or you want to be able to seek financing, you may want to have more than one director so you can have people to bounce ideas off of. If it is that you're definitely going big and you're going junior market or main market, you're going to need a board. One director is not going to fly because investors are going to be like, I'm going to trust this one person with my money. So again, there's no answer to that really. It just depends on what it is that you're trying to achieve with the business. But one is totally fine. So you're registered now. You're registered. You've assessed your mind to all the things that you need to get done. You've made a plan for it. What next? Other things that you want to always consider in operating the business are asset ownership. When the business gets an asset, how will it be owned and by whom it will be owned? There's a lot of times when people incorporate a company, for example, and they purchase certain properties or other assets and using the company's money, but then placing the asset in their individual names. That's a no-no unless there's some other relationship between the individual and the company for the company upfronting that money for them. Generally, the asset should be owned by the entity from whom the money is taken from to purchase the asset. For partnerships, again, we'll mention that you need to flesh that out in your partnership agreement. Data protection, put it here because it's fresh, it's new, but it applies to a lot of us. Because in Jamaica we like to collect a lot of personal information, but that is something that you would need to assess your mind as to whether your business, whether you are a sole proprietor, a company, a partnership, or a branch, if you're captured by the provisions of the Data Protection Act. Processing personal data in Jamaica, or if you're outside of Jamaica, but personal data for data subjects in Jamaica, you may be captured by the Data Protection Act. So you would want to also just see if that applies to your business and decide how you're going to deal with that. Corporate governance generally, you should definitely consider that. This is not something only for the big companies or the listed companies. Corporate governance for family-owned businesses and small businesses is definitely something that is recommended. It assists with how you flow and have your business operate and run behind the scenes. Contracts, very important as well, whether it's a one-page contract or a 10-page contract detailing everything under the sun. You need to have documents in writing, not just to protect yourself in your personal capacity, but to protect your business. And so it's very clear as well that for your customers and consumers to know what they are to expect. Consumer protection, you need to be okay with that as to what you are not allowed to do or allowed to do under the laws in Jamaica in providing the goods and services. Anti-money laundering legislation, again, depending on the sector that you work in, this may apply to you. And gone are the days where this only applies to the banking sector. So, for example, lawyers, real estate people, where we have to comply with the anti-money laundering legislation as non-designated financial institutions. So again, you need to figure out if you are captured by that and ensure that you comply with it. Work permits, if for any reason you are offering a business here, but you decide to have somebody overseas who is not a Jamaican resident come here to work for you in your business, you need to assess your mind as to and work permit application for that person. And tax obligations, which I left for last because I know people don't like to talk about tax, but tax is something you have to plan for. You need to ensure that you comply with it. If you fail to comply with it, something simple as getting a tax compliance certificate could be detrimental to your business, because I can promise you no one is lending you any money without a TCC. So those are just some of the things I listed here. I didn't want to go too in depth, on them, because some of them get very heavy. I'm happy, of course, to further discuss in a different forum, or you can reach out to me. I think that's my next slide. Right. So feel free to contact me at shaniel.maybrown@mfg.com.jm. And I will be able to assist with anything that you may need assistance with in starting your business and taking it to the next level.
Thank you so very much. Thank you so much for that, Shaniel. As always, very clear, very efficient, and very useful information. So I'm going to again say to our audience, if you have any questions for Shaniel, please drop them in the comments. I know she was taking some questions during the presentation, but if you have any other questions now, please drop them in the comments and let us hear the answers now. Take the opportunity now to hear from her. So Lanestra is asking, so a sole proprietorship cannot access a loan from a financial institution?
So a sole proprietor can access a loan. Sorry, by default, I tend to speak always about companies because that is the area I'm in. But most of the things I said would apply to a sole proprietor. The only difference there again is when you go to that financial institution as a sole proprietor, how the financial institution is going to assess you as a sole proprietor might be different from how they assess you as a company. So they're going to take into consideration all the debt that you already own as a sole proprietor. They're going to look at the assets that you have as a sole proprietor. They're going to look at any risk associated with you as a sole proprietor. Whereas if you as a company, they will ask for more information about the company. They may go behind and ask about the shareholders because, again, you're still behind the company, but they may be more willing, and this is not legal advice or any financial advice, but they may be more willing to lend to a company rather than a sole proprietor. I know that some entities definitely have small business loans directed to sole proprietors. But no, being a sole proprietor doesn't restrict you from getting a loan from a financial institution.
Awesome. Thank you for that. I think one of the biggest concerns we had earlier on when we were much younger and didn't really know anything about anything, we did register, or rather Jermaine registered as sole proprietorship, right? And that is how we were operating, not understanding the difference. Initially, the thought was, okay, company's office says it's X amount to register as a sole proprietor and Y amount to register as an LLC. The Y is bigger than the X. So initially we were just looking at, okay, it's cheaper to register as a sole proprietor, so let's just do that. And that is the route that we took. But as we learned more about business and what the benefits are for the LLC, coming into L.E.A.R.N, Grow, Invest and choosing to register L.E.A.R.N, Grow, Invest, we went with the LLC option. So that the business could grow beyond just us, for one, and also so that the business would have its own personality, as you put it, be its own entity outside of us. So we saw those benefits, and it does come with more responsibilities as well. So I'm just saying that to encourage those who are considering starting their businesses to look at both the pros and the cons. And I think Shaniel did a great job of laying those out here. So watch it back, rewind and watch it again, listen again if there was something that you missed. We have another question here from Mystic Soul. If you have a foreign registered business and would like to operate in Jamaica, would you register as a sole proprietor or a company?
Okay, so I know you guys probably thinking, why she can't just answer the question? But again, there's no short answer to this one. It really just depends. So if you are a foreign registered company and you're coming here to Jamaica, there are a lot of things you have to consider. You have to consider if when you're trying to operate here, if you're trying to create what I call a subsidiary, which is a separate legal entity from your foreign company, or is it that you're really not interested in that and you just want to have presence here? So you go ahead and register what we call an overseas branch under the Companies Act. A business, so if you do a subsidiary, what you're doing is incorporating a Jamaican company, and then the shareholder of that Jamaican company is the foreign business. So when dividends get paid out and things like that, it gets paid to the foreign business. If you decide not to take that route and you just want to operate business here under the same name, doing the same business, have all your accounts tied up in one, then you can register an overseas branch, which is just like an extension of the foreign company. That's generally the route taken by overseas business. Sole proprietorship wouldn't apply to foreign overseas business per se, not in that sense.
Thank you. All right. So thanks, Mystic, for clarifying, because I know you had asked a question earlier about foreign entity, but that clarified what you were asking, and we're able to get that answer. So coming out of the presentation, I know Shanilia had said you weren't going any deeper because things can get heavy, but even just that list that you shared, I'm sure that there are some persons looking on like, man, it already looks heavy. It already feels heavy. What would you say? What would be your encouragement to persons who are kind of on the fence at this point about registering their business? You know, they're doing some business or thinking about a business, but they're afraid to take that next step because of all of the responsibilities. What would be your encouragement to them?
I would say if you are trying to definitely grow your business, make it bigger and be there in the long run, it's better to register, jump on board for all these obligations and get in the hang of doing it to help your business grow. Personally, I believe if you try and say, let me just keep it small, let me not do any registrations at company's office or JIPO, you're doing your business a disservice. You need to put your business out there. You need to let future investors, future lenders know that you take your business seriously, that you are registered with the company's office, you register your trademark with JIPO, you're on board with all your tax obligations, you've assessed what applies to your business, and you're complying. I think that is the approach you should take, even though it may seem daunting because there's so much to attack. But you just, again, tackle it as in bits and pieces and get it done. And assess your mind to what you can do now, what you can do later. It's not a matter of, oh, I had no clue that existed. It's better than, I know it's there, it's on my checklist, I'll get to it here. Include all of that as a part of your business plan. It can't be your business anyhow.
Thank you. Thank you. So if there are no other questions, or if there are other questions, please put them in the chat. If there are no other questions, I'll close out with Lanesra's commendation that it was indeed well presented, Shaniel. Thank you as always. Guys, Shaniel is not a stranger to the platform nor to us, and this is always our experience with her. So again, if it is that you would like to contact her for any further information, please do email her at shaniel.maybrown@mfg.com.jm. The number is also there, 876-922-5860. So feel free to contact her with any other questions that you may have. And again, I just want to say thank you so much, Shaniel, for spending this time with us this evening. Again, a whole other masterclass. Guys, you got 2 in 1 tonight. And I feel as if, I believe that it is helping many persons to get a hold of what they need to do, where they need to focus, and how they need to organize themselves to have thriving businesses or to set up themselves for success. So thank you so much, Shaniel. And I hope you have a great rest of evening.
Thank you.
All right. So again, the okay, so Chanel, before you go, there's another question. Sorry. Adrian is asking. Adrian is asking, what's the
I know what
BOR
he's
A?
asking. I know
Okay.
it's a
All right, because I don't.
the BORA form, which is the beneficial ownership return form.
Oh, oh,
So
the B.
I know,
Okay.
as I said, I really every time I come on this platform, it's always I'm trying to put as much out there to give you bits and pieces, but I really could spend so much on each slide. So as I think it was last year, where are we? Everything got blurry when I got pregnant. But the company that was amended recently to include what we call beneficial ownership declaration requirements. So 2 or 3 years ago, when you wanted to incorporate a business, you would just incorporate, list your shareholders and your directors and move right along. When you're incorporating a company now, you have to declare what we call beneficial owners. So they're going behind the shareholders, especially if that shareholder is another company. So they technically want you to indicate who are the ultimate owners, controllers of the business. So if Chanel incorporated a company that was called Everyday People Limited, and Chanel also incorporated a company called Everyday Dogs Limited, and the shareholder of Everyday Dogs Limited was Everyday People Limited, company's office wants me to declare in that BORA form who the shareholder of Everyday People Limited also is. They want you to go all the way back to the ultimate person, meaning an individual in control of the company. And those amendments were really included in the Companies Act to help Jamaica come off of the grey list, to combat and tackle anti-money laundering as much as we can. So that is why that form is not required.
Okay, thank you for clarifying, because it threw me off there. I was like, BOR A, what?
Yeah.
And I just completed this for us. So I'm very aware of the form. But thank you for that. And Lanestra says that that's what she was asking in regards to sole proprietorship and the beneficiary question.
Yeah.
So
Again, another obligation, but it's just something that you just have to remember to add to your register of shareholders. And realize again that it was something that had to be done in Jamaica, so Jamaica as a whole could benefit from no longer being on this daunting grey list, which is affecting the economy growing. So yeah.
awesome. Okay, so I think that's genuinely the last question. I'm checking IG as well to ensure. All right. So that is the last question. So thank you again, Shadil.
No
And
problem.
certainly, if any other questions come up, we'll be sure to direct them to you. And if you're watching this on the replay, then please feel free to drop them in the comments under the video, and we'll pass them over to Chanel for her to respond. So thank you, Chanel.
No problem. Bye again.
Bye again. All right, guys. So as always, the presentations here tonight were packed with value and so good for those of us who are thinking about starting the business, who have just started, or who have been in business for a long time and just need a reminder, a refresher of the things that we should be doing. These tips from our accountant tonight, Kevin McIntosh, and our lawyer tonight, Chanel May Brown, will help us to get on track and to stay on track and to truly be in the best position to accelerate our growth and to grow our businesses, to ultimately grow our wealth and build legacies. So it all aligns with where we're going, where we're heading on November 29th and 30th, 2024. The dates for Grow Your Wealth conference this year. Now we're going to be in person and online. We have VIP available this year. We have an app coming for you for the conference this year. There's so many things that are in store. And most importantly, there are more of these presentations that are impactful, practical, and helpful in a way that you'll be able to leave the conference on Saturday and implement things on Monday to make a difference in your business, a tangible difference, one that's going to show in your bottom line, not just the top line revenue that Kevin mentioned earlier, but also in your bottom line. What is your net profit? What are you taking away? what can you actually use to reinvest in the business, to reinvest in yourselves, right? So we're talking about real growth here. And we are encouraging you to get your tickets early. We extended the early bird pricing to October 31st. That's tomorrow, right? Tomorrow, which is also the final day of the Start Your Business Challenge. We extended to tomorrow, October 31st, those early bird prices. You just need to go over to learngrowinvestconference.com and get all the additional information on all our speakers, all our topics, and very importantly, grab your tickets today. All right. So thank you again for spending the time with us. We know that it has been a valuable time, and we look forward to more questions and more engagement from you, our community. The Grow Your Wealth Conference is almost here. If you're a seasoned or aspiring entrepreneur ready to elevate your business and personal finances by learning from experienced, impactful, world-class entrepreneurs, then this conference is for you. Grow Your Wealth is happening over 2 days in Kingston, Jamaica, with unique speakers, business networking opportunities, actionable teachings, a business pitch competition, and access to an engaged community. So save the date and get your tickets now. Tickets and more information are available at LearnGrowInvestConference.com.